You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Bootcamp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. Most options trading platforms are commission-free, and there are some that don't charge per contract fees. Public.com goes a step further. When you trade options on Public, there are no commissions, no per-contract fees, and you get a rebate of up to 18 cents per contract traded. That means it costs less than $0 per transaction. In other words, instead of paying to place options trades, you literally earn money, and that money can add up fast. If you trade 1,000 option contracts on Public, you'll earn up to $180 in rebates. 10,000 contracts? Up to almost $1,200. It's pretty obvious why NerdWallet recently gave options trading on Public 5 out of 5 stars. Because Public really stands out for the cost of its options trades. Their words, not ours. If you want to start paying less than $0 to trade options, check out Public.com and get a rebate of up to 18 cents per contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Bootcamp.
All right, everybody. That music means we are back doing double duty once again. Another doubleheader on Education Wednesday for everyone's favorite options educational program. Yes, it is time once again for Options Bootcamp, aka what the cool kids call OBC. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you are binging out there these days. Thanks to everyone who takes the time to rate and review out there, just like this week, our 5-star review, actually coming from, it might be the Spanish iTunes store. This translated from Spanish, it says, 5-star review from El Idolo, so the idol, liking us, saying, thank you so much for Options Bootcamp program. I'm guessing something lost a little bit there in translation, but thank you, Mr. the Idol, for taking the time to rate and review our stuff out there. It does help new people continue to discover the show. You might say, man, they've been running for over a decade. They don't need my review. You know what? The algorithms favor the new stuff. So if you leave a review out there, it does help with new people just continuing to discover the content. And if you want to discover more content yourselves, you want to join our buddy Mango Lover 75, just won the Pro Trading Crate. You want to get options oddities. You want to get Pro Q&A. Just had an awesome one just yesterday with our buddy Mr. Matt Amberson from ORATS, who's been on this show a number of times. He loves taking your questions. You folks hit him with all kinds of back testing and strategy stuff. If you want to join for that kind of stuff, those are awesome. TheOptionsInsider.com/pro. And the good news is if you join now, you can win maybe next month's crate. You can also get access to that Matt session and everything else we've done. 300 plus episodes waiting for you the second you hit that button over there. TheOptionsInsider.com/pro. And if you head on over to MarketTaker2Ts.com, you can find the home of one Dan P. Mr. P, a.k.a. Maestro P. Welcome back to the show, sir.
Hey, it is great to be back again.
Again, amazing how that works, huh? As we keep on rolling right on into a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, listeners, welcome to the Mail Call, the portion of the show where you folks take the reins and take us in all sorts of crazy, wondrous, and wild directions. Well, let's kick it off. Dan, I know you have a question of the week you want to get to. Before we get there, let's get to some of our questions of the week. Let's pay off questions that are actually just last week for us here as we're recording the show, 2 weeks ago now by the time it airs on the on-demand side. We asked you folks last week, NVIDIA was a big deal, obviously, heading into their announcement. The straddle was trading for $78, $10 more than it has averaged previously. Is that too expensive, too cheap, or just right? And exactly 50% of you ended up saying you're not touching it with a 10-foot pole. Then we had number two, $78 was too much, too pricey, 31%. We all know how that worked out. NVIDIA ended up blowing through that. And then 9.5% each for a tie between it's too cheap and it's Goldilocks, just right. Dan, I know you weren't a fan of NVIDIA. Sounds like our audience wasn't either. 50% of them saying they weren't touching it with a 10-foot pole, sir.
Oh, yeah. Well, once they announced the split, things got a little bit more interesting. And that thing's been just on fire since then. But it gets a little harder to buy at this level. But, you know, like that's always the thing, right? If I was nervous to buy it at 1,000, now it's at 1,200. Should I be nervous or should I be jumping on there? It's always tough. It's tough.
Well, we asked our audience that question after the earnings. NVIDIA actually sold off, listeners, and we said this sell-off after NVIDIA's blockbuster earnings, does that signal a top for this market or just a break before the next leg up? And 65% of you said, 65.6% actually said, heck no. Buy more of this right now, and 34.4% said, heck yes, this is the top. These levels are crazy out there. So, intriguing stuff. Our question of the week, well, we also asked you last week a fun flyer. We said JetBlue, JetBlue, $5.50 calls. We're trading for 20 cents, 1 week calls. Someone bought 10,000 of those last week. We talked about these on our Options Oddity show, listeners. So again, you should be checking out on the Pro. Kind of fun out there. And someone bought 10,000 of them, again, for 20 cents. Are you a buyer or a seller at that level? And going back last week, the stock was hanging out at about 5.30. So these were out of the money, 5.25. These were decently out of the money calls, a week to go. And 54.5% of you said you wanted to buy them. Only 45.5% said you wanted to sell them. I thought it'd be the other way around. So you folks liking some premium in JetBlue. Right now, the stock has moved a bit. It's up to about 544. Obviously, has a ways to go to hit that 570 level to break even on these calls. It's got to do it by the end of this week. But apparently, you folks like rolling the dice in JetBlue on a week. Speaking of rolling the dice, Dan, we're doing exactly that this week with our question of the week. We said, let's have some fun. We're coming back from a truncated holiday week. Let's just pick some stocks. So we said, you know, at the time we posted this on Monday, both Palantir and Robinhood were trading at about exactly $21. Which raises the question, which one would you rather buy? Are you Hood all day? Are you Palantir for the win? Are you out on both? Or are you the audience that prefers to trade volatility? Mr. Dan, what is your vote and which way do you think our audience is going?
Well, I have been long Palantir for a while. I think that for the long run, Palantir is a real nice stock. As far as Robinhood, I don't know. Robinhood, I'm a bit more skeptical on, but yeah, I mean, for me, my money is where my mouth is. I own Palantir. I don't own Robinhood.
Let's see which way our audience is going. Senior AP, and right now they agree with you. 43.2%, Dan, say Palantir for the win. 35.1% say Robinhood all day. 16.2%, the hardcore, said they'd rather trade vol. And 5.4% say they're not touching either. Now, listeners, if you're listening at options, you got till the end of the week to make your voice heard. But it is now the time you have been waiting for, listeners. It is time for the Market Taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
All right, Mr. Dan, sir, what you got cooking for the folks this week?
All right. The question of the week is, when are you going to update the music?
Yes. We have been remiss in that. We'll do it on the podcast. So the folks listening to the podcast will hear the new tune. The folks listening live, they get to go a little bit to the danger zone. Why not?
Yeah, and the backup question week is, when the hell is Dan going to remember that the music is coming and not just start talking like an idiot?
That's never. That's due to the day drinking. See our earlier episodes. We discussed that.
Oh, goodness gracious. Okay. Well, people ask sometimes what is a good market for the wheel strategy, cash cured puts and covered calls and such. And there's an answer. And the answer, I mean, the best market tends to be a sideways market, where we get some peaks and some troughs and a move sideways. Now, that being said, maybe the second best market is down market. And maybe the third best market is an up market. And, there's variations of all those. Like a slightly up market is also great for covered calls, but a really, really strong bullish market is a little bit tricky, but I wouldn't argue that it's bad for covered calls. I would just say that it's a little bit trickier.
Trickier indeed. Let's see if your questions are tricky this week, listeners. Let's go out to this first one here from, I guess, 20-year kid. I don't know what that means. Are you a 20-year-old kid at heart? Have you been a kid for 20 years? I don't know. That's an interesting handle. Either way, he says, have you guys ever done a broker review show? Would listen. And the answer to that is no. We have resisted doing that since the dawn of our website back in 2007, and indeed of this network, for a variety of reasons. I think many of them would probably be obvious. First off, listen to this show. What did you hear in the intro? You heard it's sponsored by a brokerage firm. So that creates a huge conflict of interest if we are now then going out and reviewing said firm out there. For our listeners, they might wonder, is there validity to this review? And I wouldn't blame them. We disclaim everything up front, but still, you see it all the time on YouTube and others. People get products for free and then they try to review them. And there's always a question about that sort of thing. So we don't want to put any of our co-hosts in that sort of position. We don't want the sponsor to feel like they're entitled to a good review because they are sponsoring. And certainly firms would try to game the system on that front. So we don't want to create any sort of conflict of interest. We don't want to create any sort of perception on the audience that there could be. So we avoid that. And also, you might say, well, go out and get other sponsors beyond brokers. If it was that easy, we would. But the truth is, the options education market, the number of firms willing to listen to the long run of this show, it's been pretty much all brokerage sponsors out there. And this is a very popular show. It's just the number of people out there willing to support options education is becoming fewer and fewer, and it's usually all the broker dealers. In fact, that's an interesting topic. I'll be talking about that with some reporters later, about the kind of the death of options education and what maybe we could do about that out there, because it is an issue. We've seen all of the major exchanges. We've had NASDAQ on this show a few times, but there used to be a day when every exchange had an educator on staff. They had educational teams, and they viewed education as job number one. Now, if you go to a big conference, you see the CEOs of the big exchange groups on stage. They all say education is our job number one. But then when it comes to actually, putting their money where their mouth is and having educators on staff and going out there and supporting options education, they leave it to the brokers or they leave it to the OIC, which does a good job, but there's only a couple of guys, and a couple of girls. So they can't really do the heavy lifting for the whole industry. So long way around to saying, if for this show to continue, we need the brokers to support it, and we don't want to create any sort of apparent conflict of interest with the sponsors and the content we're doing for you. So we just avoid that entirely. Mr. Dan, any thoughts on the, let's say, dire nature of options education out there? The number of firms out there supporting it seems like it's less and less all the time.
Yeah, I mean, it doesn't make any sense, because when I was with the CBOE's Options Institute and congruently with the Options Industry Council, they were using options education as a marketing tool to grow the industry. And many brokerage firms were doing that also. And there are still some, but they're fewer and farther between. It's a brilliant tool for marketing because for two reasons. One is it exposes people to what they can do with it. And two, people who have no options education, they're going to blow up their accounts and they're not going to be your customers anymore. Like brokerage firms want their customers to make money, believe it or not. They do, because for selfish reasons, they stay customers longer. It's a very symbiotic relationship. They want you to make money. So why don't they help you to do that? Why don't they teach you to do that? It doesn't make any sense for them not to provide options education. No sense at all.
Yeah, even some of the newer players in the options brokerage space kind of light on the options education front. I do ask that to the folks at Public, so you can check that out, what they offer on the educational front, because we are pretty demanding in that aspect there. But you're right, Dan. The exchanges, once they all went for-profit public entities, they had new masters. They had the analysts, and the analysts don't see a direct correlation between education and a one-to-one rise in revenue, the way a broker does, right? So they just decided it's an expense. We're going to get rid of it to please the analysts. And as a result, I think the industry has suffered. But you're right. I should have mentioned SIBO. They are the lone exception to that rule. They still have the Options Institute, so they still do some education over there. So I tip my hat to them. But the rest of the exchanges need to put their money where their mouth is and not just make it lip service out there. All right, a long answer to your question, but as you can see there, who asked that? Who was that? I don't have the name here. Oh, 20-year kid. But you can see it's a hot button issue for both Dan and myself. Let's keep going. Let's go to Neil. Neil Appleton. He says, I enjoyed the Flex episode. Well, thank you, Neil. He says, can I trade a Flex option if I do it for 100 contracts? The short answer is no. I mean, not really. Unless you have a huge size account, you're going to have a broker who wants to facilitate this. The broker's going to have to go out. Remember, Flexes are an RFQ market, a request for quote. So there's no one going to be standing there flashing the quote for you to hit it. You have to contact them. They have to be willing to make a market for you. And your 100 lot, probably not going to get them out of bed unless you have a huge account. If you have an enormous account and they want to keep you happy, in which case, congrats to you. They might be willing to make an exception in your case. But for the average person out there trading, if you got 100 lots, and maybe you have a bigger account, maybe you got 100 grand, maybe you got $1 million in your account, a couple of million, it's not gonna budge the needle. Dan, what do you think? Flex trades for 100 lot. What do you think?
No, I mean they're designed for bigger players. As a market maker, I never wanted to trade flexes because you're married to them until expiration, basically, and it's just they're more of a hindrance. But if you get edge on it, great, you'll do it. But getting edge on 20 contracts or something, I mean, who cares? Well, big deal. I make $97 or something. I would want to trade it in big size and then just lay off the traditional listed options against it. So yeah, I think you really have to do bigger size than 100.
Yeah, you have to ask yourself, what do you want to do a flex for that you can't get done in the listed market? What is your reason for wanting to do a flex? Chances are you can probably get something done close to it in the listed. But I don't know, Neil, if you have a specific example, send it in. Maybe we'll discuss your need for a flex. Let's go out to Max. Max says, if I buy a call heading into an earnings announcement, how much of that earnings move will be priced into the call option? Wow. There is a lot that goes into this question here, Max. We've done many episodes on it. I'll have to go back and look at some of those. Short answer to your question is if you go to our website, theoptionsinsider.com, click on the Options News and Articles tab. We have done this analysis for you. In fact, we got so many questions about earnings vol years ago that I finally said to our buddy, Mr. Matt from Orats, who's been on this show many times, was on our Pro Q&A just yesterday for our Pro members. I said, Matt, you got all this data. Let's start crunching it around earnings season for all the big names. And then guess what? Let's give it to the people for free. So he agreed. And we've been doing that exact thing a couple of times a week for years. So that data going all the way back for years is on our website. You can go find it right now. It'll show you all the top names. It'll show you what they're pricing in terms of the earnings straddle. Remember, the straddle is what we're looking at here. And then what they've moved in the past, their trends, all that kind of stuff. You can see the overall aggregates for the season, upcoming names, what they're pricing in, how they performed in the past. Again, it's a boatload of great data. If you wanted to get this anywhere else to use, there was a Goldman study about a decade ago, and that's really about it. You have to go commission a brokerage house to do this for you, or a research house. They're not going to do it for you, spoiler alert, unless you pay them a lot of money. But we're doing it for free. So I encourage you there, Max. Go check it out. Matt and his team have great data. If you want more, you can always go over to orats.com. They'll have more there for you. But it's fascinating stuff, and you can see for yourself exactly how much of this juice is priced in. Dan, I know you trade a lot of earnings. You have your earnings trading system. What do you have to say here for Max? How much of an earnings move is priced into the calls ahead of time?
Well, hopefully a lot too much or a lot too little. Hopefully not the right amount, which is generally the case. It's almost always not the right amount. Because if implied volatility was actually fairly priced, well, first of all, that would require seeing the future. But I mean, if it was always right and fairly priced, there would be no money in trading options. Implied volatility being wrong, which it always is to some degree, is what gives option traders an edge. So I find, because earnings also is my thing, that most of the time it's overpriced. Most of the time it's overpriced. Sometimes not enough for it to warrant a decent enough trade, but most of the time it is.
All right, let's see how many more we can squeeze in here. Let's go to co-main event. I like that handle. You know, Dan, he's not overly full of himself. He's not the main event. He's just the co-main event. You're here to see him, but he's not the main guy you're here to see. I like that handle. That's a fun one. He says, is it viable to only trade options in my account and never trade stock or any other underlying? Or am I just limiting my, quote, options? And he put a smiley face. I see what you did there. You're a punster, aren't you, co-main event? Is it viable to only trade options? You know, you're talking to the wrong guys. Dan and I, this is kind of what we do. We don't trade a ton of stock. I mean, I have some stock. And usually it'll be in longer term stuff that you kind of want to just set it and forget it and let it go for a while. But that said, it is definitely viable to go not but the options route. And you can even go that way, the set it and forget it. You can do long-term stock substitution. We talked about that in the show many times. So I would say, I mean, obviously we're kind of the choir here, but still definitely viable. I would mean the lion's share. You really have to dig deep for me to find stock. Maybe if it gets put to me, if I want something happens, I don't close the trade out, I'm busy or something. Maybe I get some stock put to me. I'll usually wheel right out of it or sell it. So outside of some long-term stuff, I really don't trade a lot of stock. So it is definitely viable. Dan, we have to say here for the co-main event, he wants to know, can you just do the options and forget the stock stuff?
Yeah, I mean, you can. I mean, first of all, as a trader, yeah, that's mostly all I do, for sure. As an investor, I do get involved with stocks. Can you do that just with options? Yes. It requires a very different discipline, though. But yeah, sure, you can. You want to be really, really good at it if you're doing this with your life's nest egg. But yeah, the answer is yes.
Very much so. Who was that? Co-main event. You get the Handle of the Week award as well. Of course, our next guy here has an argument. He's Backy Beats. Maybe Baki Beats. Coming in on YouTube on our episode 247, Strike Selection, Voodoo, and Surprise Crypto Dividends. And he said, I'm the first view. That's a first. He was very excited. Yeah, I mentioned Backy Beats and others that we're doing some stuff on the YouTube. And what's going on is it's actually kind of recycling and reposting some of our old stuff. So what's going on is some of these episodes that are maybe a decade old, or if not more, sometimes coming up back on the YouTube. And we have had the YouTube for a while. We haven't really used it for much until more recently. So back when we had not a lot of viewers on the channel or subscribers, really, that stuff was getting posted there kind of automatically. So yeah, there's stuff being repurposed that could have, old stuff with no views. So yeah, by all means, take advantage of it. Be the first. I know a lot of you folks are going in via the YouTube now. More and more listeners coming that way, which, let's face it, at the end of the day, YouTube is mostly listening anyway. How often do you actually watch something? But that said, a lot of you coming that way, feel free to get out there. We're going to spend more time kind of organizing the YouTube now and make it a little bit less intimidating for newcomers coming in on the YouTube, because there's a lot of content there. So look for new stuff coming on the YouTube front as well in the near future. But for now, yeah, if you find some of these old ones that are getting repurposed up there, by all means, be the first guy or gal out there and then let us know. It's always fun. There we go. All right. Mr. Dan, I know you got to head on out of town here next week, and you got to head on into a webinar pretty soon. So we got to call it there. But before we go, Mr. Dan, give us one last preview here of what you got coming up soon out there in Sonoma. And then B, if folks want to learn more about upcoming stuff, where should they go? What should they do?
Yeah, I'm leaving for Sonoma for our Smart Trade Summit in 1 week from today, and putting together some really, really great classes, all brand new content. So this is your last chance. If you've been thinking about it, it's time to stop thinking about it, make the decision to join us. Email me, dan@markettaker.com, and I can send you the link to get you signed up and get yourself on a plane out to Sonoma.
Oh, one last thing before you go. You just hit the Sphere in Las Vegas, right? Give us a 30-second Sphere review before we wrap up here. How was it?
Dude, I will tell you what. Everyone should go to see a concert at the Sphere, no matter what the cost is. I mean, I don't want to be like super hyperbolic and say a life-changing experience, but it was basically a life-changing experience. Wow. It was freaking amazing.
Wow, no cost too high, says Dan, to get into this. I have heard amazing things, so now you're the first-hand experience I'm hearing here. So interesting stuff. So listeners, maybe we'll do a show in the Sphere. What do you think, Dan? Only cost us, what, like $10 million to get in the door? That should be worth it.
Right, yeah, that'd be great.
Listeners, do you too have a Sphere story? Hit us up, let us know. I do want to check it out one of these days. It should be fun. That is going to do it for the episode this week. Check out Dan over there, markettaker2ts.com. Also check out our friends over there at Public. They are keeping the show coming at you week after week. So check out their platform. It is still new. It just launched back in January, so they are still evolving it. Check out my interview with those folks over there if you want to learn more about what their platform has to offer, what they have on the educational front, maybe what they're missing too. I do ask them about that stuff, what you can look forward to. And if you have feedback, you beat around on the platform, say, hey, you're really missing this. Let them know. And also let them know that you heard about them on this show. It goes a long way towards keeping these shows coming at you for another decade out there. We'll see you back here tomorrow on the network. For those of you listening on the full network side, and you should be listening to the whole network, what are you doing? We've got the option block with our friends over there at SIBO, followed by This Week in Futures Options with our friends over there at CME. Friday, Vol Views, and then after that, exclusively for our pro folks, theoptionsinsider.com/pro. They come back for a little bit of options oddities. Then we're back again next week on demand because Dan is traveling. And then back again in 2 weeks for another episode of Options Bootcamp. Stay safe out there, everybody.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures and podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider or via questions@theoptionsinsider.com.